Hello, welcome to the European Open Briefing for Thursday, November the 24th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the dollar is once again the main headline. Yesterday it broke above the 112 yen level, and earlier today it broke above another key area above the 113 yen. As the Fed made its clearest signal yet that it will likely raise rates in December. The dollar index also made fresh gains, reaching a 13.5-year high. And we had some very strong data out of the US yesterday, which further reinforced expectations of a Fed rate hike very soon. The dollar surge had a negative impact on gold. It slumped below the 1,200 level to a 9-month low, and the euro also came under pressure, reaching another 11-month low. And this comes despite some fairly strong business survey data out of the eurozone. In commodities, crude oil prices were steadier this morning. After Iraq hinted that it will participate in any production cut agreement, and this comes after reports yesterday that Iraq was not happy about how the negotiations were proceeding. So let's begin with looking at the dollar-yen pair. We can see that new high earlier today it was an 8-month high of 113.53. The dollar had a double dose of strong US data and the Fed minutes. The FOMC minutes, which were published yesterday for the November policy meeting, it said that most participants were in the view that it will become appropriate to raise the target range for the federal funds rate relatively soon. And it's suggested that the Fed was seeking just some further evidence of progress towards its goals, and this pretty much confirms what most market analysts are expecting, that we will get a rate hike in mid-December when the Fed next meets. We had, of course, a very strong data, durable goods data out yesterday. There was a big jump in durable goods orders in October. We also had some business survey data in the form of the market manufacturing PMI, the flash reading, and we had the final reading of the University of Michigan Consumer Confidence Index, both of which were better than expected in November. So that's again pretty much confirms what everyone is thinking at the moment, that we will get a rate hike soon, and this pushed the dollar index to another new high. It hit 102.05. That was the highest since March 2003. If we look at the euro now, we can see it made a fresh 11-month low earlier today. It's rebounded a little bit, although it's still well below the 1.06 level. The low was $1.0517. This comes after we had a pretty strong Eurozone flash PMI yesterday, both the services and the manufacturing sectors. We also had German IFO data today, and the report suggested that there was no impact from the Trump's election win in the US. There have been some worries that perhaps the Trump win might have a negative impact on business confidence outside of the United States, given that Trump has trade views or trade protectionist views that could be seen negatively by the rest of the world, although there was little sign of that in the latest German survey data for November. But despite those positive data, the euro is under pressure because the ECB is still expected to go ahead and extend its QE purchase program in December, while the US is expected to resume its rate hike cycle. If we look at the pound, we have a slightly different picture because the pound is able to hold about $1.24 pretty comfortably at the moment. The UK Finance Minister Philip Hammond presented his first autumn budget statement, and that was also the first budget statement since the Brexit vote. It was a very cautious budget statement. the UK Finance Minister or Chancellor of the Exchequer didn't give too much away, as he kept some funds away in case we see some unexpected negative developments in the UK economy from the Brexit process. Although he did announce quite a series of measures to help boost investment and innovation in the UK. He also announced some measures to support lower income families, and he reaffirmed his commitment to cut corporation tax to 17%, which had been announced by the previous government. But the main impact on the markets was the fact that the growth forecasts weren't downgraded as much as had been feared. Although he's expecting slow growth over the next 2 years, some market analysts were expecting even gloomier downward revisions to UK growth. If we move on to commodities, we can see gold there, that big slide downwards. It hit a 9-month low of $1,181 an ounce, and this comes after the dollar's surge yesterday, and that had a downward effect on gold, as usually when the dollar goes up, the demand for gold goes down as it becomes less attractive as a safe haven. Crude oil prices, on the other hand, they're fairly steady. As mentioned, Iraqi Prime Minister said that they will participate in any deal. We had some reports to the contrary out yesterday, which we can see some volatility earlier yesterday. And also supporting prices was unexpected drawdown in US crude stocks, according to the latest US Energy Department inventory data out yesterday. If we look at today's calendar now, we can see it's a very quiet day. It is, of course, Thanksgiving in the US. The markets are closed in the US today. They will reopen tomorrow. So the next focus will be Japanese inflation data out tomorrow morning. If you look at what's been already released today, you can see it's mainly German data. We did have some Japanese manufacturing PMI, which showed the manufacturing sector holding above 50 for the third straight month. If we look at the German data now, we had the third quarter GDP confirmation that Germany's economy did slow down in the third quarter, although we should see stronger growth in the fourth quarter. And then after that, we had the IFO data, which was more or less steady in November. We can see the main business climate index unchanged in November. It was a little bit below expectations, but the rest of the day is looking very quiet. That's it from me. Thank you very much for watching and have a great day.